TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 43. You get the NASDAQ off 38. S&Ps are off 9. Gold contracts trading up to $10 and $1,196 an ounce. You have silver up 16 cents at $16.61 an ounce. Platinum's up 5 at $11.52. Light sweet crude is pushing that $61 level. We're up $1.71 a barrel at $60.62. Bonds. Bond market, folks, continues to have big problems. You get the 10-year down 10 ticks. 127.14, 30-year off 25 ticks, getting lower, 155.29, and King Dollar's down 67 ticks at 95.56. The euro is flat at 111, and the yen is up 25 at 120.37. Now, if we go over to the S&Ps, what you're going to see is this. Yesterday, all the indices, S&Ps, NASDAQ 100, Dow Industrials, small caps all try to get into their highs. They all failed on price, failed on volume. The SPY got to a price point out there yesterday of 212.02. Anemic volume, 70 million shares. Bottom line, we'll see how it basically starts moving lower today. The NDX 100, if we take a look at the 3 Qs, same type of setup in the NDX 100. NDX 100 got up to a price point yesterday of the 109.91. We did that with 23 million shares. Now, the NDX 100 and the small caps will give us the most amount of information today. We'll see, and that information that we'll be looking for is an expansion of volume. The Russell 2000, that is the weakest indice thus far. We have a high volume swing low on the IWM at 120.66. Right now, I'm sorry, 120.66. That couldn't handle any higher price yesterday. We did 37 million on the way up versus 72 million on the way down. And what you do have out here this morning is that the IWM is going into lower price again, once again, with big volume. Gold contract. What do we have with gold? Gold's up, down, and all around. Gold is building cause for higher price. Today, we've had gold up to $11.99. Right now, you're at $11.94.50. And what you can expect is that gold has continued to reject lower price, had lighter volume. What I expect you're going to see out here in gold, gold probably back down once again to this 1190, 1192 area, but gold is building cause for higher price. Bonds. Now, the bond market, folks, number one, is going to give us the most information about rates. Number two, that is going to throw a wrench in just about everything. Now, what we had out here yesterday is this. Bonds came down. However, they came down with anemic volume. We only did 880,000 contracts in the 10-year. The 10-year likes to do a 1.2, 1.4 million contracts. You're coming into this huge sign of strength, well, not sign of strength, but the top of the sign of strength on March 6th. That benchmark is 127.16. It's 1.7 million contracts. So I expect what you're going to see is that we're at 127.12 right now. If you get a rejection of the 127.16, bottom line, you're going to get some kind of a bounce. The correlation, where I think the most amount of information is going to come out, is this, is that as the market goes south, if in fact the bond market can't go north, even on a dead cat bounce, that is saying that, guess what, rates are going to go up, and the market is basically taking a conniption because rates are going up. That's one scenario. Second scenario would be that you do get a bounce in bonds. That bounce is anemic. That would be saying, guess what? Market wants to continue going south. Bonds will bounce, but bonds probably are topped out also. King Dollar. What do we have with King Dollar? What you have with King Dollar is this, folks. King Dollar is building cause to do an ABC structure on the way down. We're at 95.62 right now. That baby, okay, at 95.62 is building a very large ABC structure on the way down. That structure wants to bring it down somewhere into the 94 area. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, visit everbank.com/TFNN. Have a great one. Have a safe one. Look forward to speaking right back here tomorrow at 10 a.m.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.